I will tell you the biggest fundamental reset that I had to personally make, and I'm still sort of going through this, but I think it was the best for us in the long term, is we elbow greased our first two sweat houses, right? So it was owners in the business every day, all of that. And that is a process you need to go through. And by the way, I still work shifts at the studio. One, I enjoy it, but I think it's important because if I'm going to tell the team, here's your label model, I need to be able to make sure that makes sense when I'm the one working in it.
Representing Franchise Secrets, Eric Von Horn.
Hunter, welcome to the show, man.
Hey, thanks for having me here. Happy
Yeah,
Monday.
we were just talking. Our Bobby Brennan's the one that got us in touch, but it sounds like you've been in the front street world following us and Franchise Secrets, and been once I saw all that you do, I'm excited to interview you.
Yeah, I love what you guys do. Appreciate it. It's really nice. I think, I started listening when we were getting into the space and just appreciate the variation in topics and, the education. I mean, somebody can listen. I was listening to one of the episodes this morning on my treadmill. So, but it's just nice to chime in. So appreciate the opportunity.
Yeah, we were talking. There's so much free stuff that you can get out there, and like the gated, like you have to pay to behind this paywall to get access to good information. There's so much out there online or inexpensive communities now, and I think AI is helping with that. There's a lot more garbage out there as well, but you get with the right people, and you can just get a lot of really good information. Then it's all what you do with that information, but it's good to have that information. Where are you learning these days? Like what are some of your go-to places to learn, whether it's podcasts or paying people, or maybe it's just a franchise, or I don't know, like how are you learning these days?
Yeah, I think a mix of all what you said. I think it's depending on what perspective you're looking for in situation. The nice thing about you got your podcast is a variety of topics. For instance, this morning I was listening to the one about how entrepreneurs invest outside of their own brands or things like that. And it's something that we do. And so it's just, hey, what are other people doing? I have conversations with other franchisees, large and small, about, how they got here and there and what they thought through and, their learns per se. And I think that's the really big piece about, I would say, just the community of not even franchises, just entrepreneurs, is they're super willing to help and educate and talk, because I think it's that whole circle you're around, right? You want to be around people that are better than you and done things. And so, for me personally, I learn better by listening. I have ADHD and high functioning anxiety, so sitting down on a book doesn't really land well for me. But yeah, no, I think it's all about what's going on in your week, your month, your quarter, that year, and see if there's any subjects out there where people have been through it. It's the best way to learn.
All right. We need to give a little bit of your background before we get into it, because I already have more questions that are coming up in my mind. But you own two franchise brands as a franchisee, multi-unit. You have some open, you're in build outs, and you got aggressive plans to open up more. You own an HVAC company that you started last year as an entrepreneur outside of franchise, and you invest in multi-unit. You've had some great exits before you got into franchising. So kind of take all that I said and give us a little bit of the backstory so the audience kind of knows who they're talking to.
Yeah, my verbal LinkedIn here. So I spent 16 and a half years in aerospace. So that's where I was an entrepreneurship major, graduated in '08, launched into aerospace. I live in the air capital of the world, so it's sort of just by nature of the markets you get into. But wasn't necessarily passionate about aircraft, but I love business. I'm a builder, so I enjoy process and working with people to achieve results. Went through every function possible: ops, supply chain, contract negotiations, marketing. Ended my career probably the last 7, 8 years in high level strategy and C-suite roles. Really was either a turnaround story or an M&A build. How do you build value in this company and sell it? Went through multiple exits. Really enjoyed that process, which I think all of that is carried over into where we're at, which is we're building a growth platform in the wellness space on the franchise side. And then on our other kind of personal businesses, investments, it's similar. It's how do you build long-term value and diversification. After our last exit in a private equity company, we decided we wanted to go full bore, entrepreneurs. My wife and I, she's our COO, much smarter than me and makes everything happen. I'm the idea guy. And then a business partner that's a good friend of mine and co-founder of the company. He's more in our org development. So, three different skill sets. I'm the strategy vision person. She's an executor, process people, and he is sort of the in between of how do I, make this company run responsibly, and educating our employees on the importance of, processes into profit and things like that. So, we launched into that again late 2023. We'll have 17 locations open this year between Sweat House and Face Foundry, and excited about building that out. On the HVAC side, got into that. Always been a huge fan of home services. We also are in real estate, so we invest in small and medium-sized apartments. Just personally, that's a long game. I think they call it mailbox money nowadays, but really believe in the value of real estate. It's a great investment and also asset to have on your books to use for other investments. So that's how the HVAC came in play. Is fortunately or unfortunately, we spent a lot of money on HVAC repairs on our apartments. And I so happened to have a nephew that was in the space. He's been in HVAC for 9, 10 years as a mid-level manager. And so it was a great opportunity to show him how to get into business ownership and give him some equity. And so he's really frontline day to day, our GM there, while we help with more of the strategy piece. So we're having fun. Diversification is important. They're all related. Our HVAC company's working on our sweat house as we speak, one of our new builds. And so I guess you call that vertical integration. But yeah, so they're all a little bit different, but connected in some manner.
All right. So you said something that caught my attention, and to be interesting, like the audience, I want to understand if this caught your attention with what he said. When we were talking about, you were saying you have these other assets that you use to help. I can't remember the exact words, but use to help with your other investments. So multifamily. Explain what you mean by you have multifamily, and how that is used to help other investments or in your franchises or with cash, or how do you use that asset besides just future mailbox money?
Yeah, I think a couple answers there, and hopefully these will make sense. We started getting into real estate probably 5, 6 years ago. Logical investment, but similar to here, started educating myself on podcasts, a lot of good education, and understand like where that fit in our personal portfolio over time. We enjoyed the concept of real estate, value add. So we'll buy something that you can improve. It's in great areas. We obviously have what we call like a buy book, but we basically go in, make those, add value to them, whether that's through renovations, like adding laundry in a unit versus not, things like that, and then increase the value of those. But in our portfolio, when somebody looks at us, whether it's a bank or something, and says, what's your net worth or what's your value? How's your financial position? That real estate, we build equity in that, and we can leverage that to invest in other businesses. Those are a long hold, and they're more consistent, I would say, in the long term. And so we've used our real estate to help, start other ventures like an HVAC or a little bit of the franchise as well, because that's our own asset that we can pull cash out of, or other levers. And so that's a strategy we personally have done that's worked with us.
So when you say when you pull cash out, is that through like a refi where you bought it for a price, you do value add, you're increasing rents, you're doing some improvements on the property, and then you refi it? Or is that where the value's increased and now the banks look at that and like, we will lend against that, you use that money to buy other things?
Yeah, more the latter. And to the point you just said, we've built a pretty strong relationship with one of our prime bank partners. So it's allowed us, when you look at the speed at which we've grown our franchise business, opening 16 basically within 24 months. We don't do SBA. It's a great process, but for our growth, it's not, something that supports. But had we not invested in that real estate and built credibility with that bank and built, quality projects and value with them, we wouldn't be able to be where we are in our franchise business, because we built credibility through that. So I think that's a really good strategy you can use. So a lot of people, one of the main questions I always get with people is, well, like, how are you funding, the growth of these, it's a lot of Fastly. And that's one of the key levers is build trust and credibility with, a local bank in Wichita. They're not a huge $20 billion bank. It's a $4 billion credit union, but they're very capable. But this is a little bit outside their box too. But then we built credibility and trust through that real estate. So
I'll say franchisors think about the same thing. I know when I was in the salon suite industry, there were two banks out of someplace in Kansas. I'm not sure if it was Wichita.
mm,
I know it wasn't Kansas City. There were smaller banks, but they lent a lot of money because it fit their criteria in the salon suite industry. And so there's two banks that when SBA stopped financing salon suites, these two banks stepped up, and that is the reason. One of the main reasons Sola Salon Studios was able to have aggressive growth when other salon suite companies didn't have access to that type of banking relationship. And it came from a franchisee, introduced it to the corporate office, and they just went all in. And it was fantastic. So franchisees and franchisors should be looking at some strategic lenders like that are just outside some of the normal big ones.
yeah, and I think last thing I'll say about this is, your quality of relationship and transparency. I think we have a really solid relationship with this bank, and they've invested in us as people. But knowing what they value, right? Traditionally, a commercial real estate deal is a no-brainer. They own the building, like that's a lot of comfort for them. In a sweat house, they don't own the building always, right? So it's like, well, I'm down to the equipment at this point, right? That's not something they're really going to be valued in. However, the return basis is better than a long game real estate for them. And so that's where it's a balance of, is this person credible? Have they done what they said they would? And then I'll invest in this because my returns are better on a paper than maybe a long game real estate deal in something like a sweat house. And I think being flexible with kind of that win-win. This is where, my corporate career was built on big contracts and developments. You have to know what the win is for each person. And so I think looking at terms that are available in that situation to get you to growth, knowing you need a level of a refinance strategy in, year 3 through 5 or year 5 versus 10, those kind of things. So you have to really lay that playbook out.
Last question along these lines. Are either you or your wife a qualified real estate professional because of what you're doing?
We have been in the past. We are not currently, but yes, that is an amazing tax strategy. I would say that's been a choice more of priority on we're all in on the sweat house business. But yeah, that is a strategy that we used, which allowed us to do a lot of depreciation and things like that. So definitely a strategy folks should look into, and certainly one we believe in. Again, we made a priority decision to focus on where we're at in front of us with the wellness company right now, but definitely something we've used in the past.
Are you not like super, is that not a priority because you have so much depreciation and whatnot through accelerated depreciation on the kind of build outs that you're doing already?
Correct. Yes. Yeah. So a ton of opportunity for depreciations with openings in sweat house. And so it's sort of just focus point on, this provides similar values. So we're focused there and quality of time in that. So also we know that real estate is a very long game, whereas the wellness, platform is, more mid-range game. So it's really just prioritizing your time.
All right. Before we get into the brands, which is Sweat House and Face Foundry, and then also your HVAC company, I want to get into that. You mentioned something earlier about ADHD and anxiety. I would love to kind of just hear a little bit more about that because we've never talked about that on the podcast, and it's top of mind right now because I was just in New Orleans, and I had multiple entrepreneurs come up to me and say either like they were, have ADHD, some level of anxiety, OCD, whatever it is. And then I had some other entrepreneurs come up there and say, my kid was just diagnosed, or, so that's why that's top of mind. And so everything that you've done, I'd love to kind of hear your take on it as an entrepreneur, and has that helped you, in ways that you didn't see it early on actually helping you?
Yeah, great question. I would say if you can understand it, acknowledge it, and learn about it, and your own personal, everybody's viewpoint's a little different. For me, I've been able to understand kind of how my brain works, and I am still learning, by the way. But I've used that to somewhat weaponize it in terms of like, how do you channel that towards positivity, right? And so I'm an overthinker, which is part of it. My brain is constantly moving, sometimes 3 to 4 places at once. When it relates to the business, it's, the old hunter would amplify the negative and be like, oh my gosh, like what's going on? Could these 10 things go wrong? Whereas, I think the modern day myself today is I use those kind of, my brain runs through worst case scenario at all times. And I turn that around to what's the action plan if each of those things happens, and kind of you build out better, more developed plans and thoughts. So you're able to do things much faster and take more risk. It's not analysis by paralysis, but been able to weaponize it in that way. It's also recognizing where you're not good. Operations, as an example, I could do that with the best of them. It's not where I enjoy operating. And so you build a team that's successful around that. Where I enjoy is strategy, thinking through multifaceted scenarios, taking the burden on for the company on the finances, all of those things, and how to really execute that. So I think just understanding yourself and how your brain works. And I don't take medication, by the way. My medication is the cold plunge. And so I think just learning how to operate in your own system and turn that into a power that can be amplified. And so easier said than done, but over the years, that's where I've been able to focus that energy.
How has that you been able to like turn that part of your brain off to focus on certain things? How has that helped you in things outside of business or in unexpected ways, just in normal life?
I would say I'm much better at observation and feedback than sometimes doing, right? So we're all, most of us are husbands, dads, entrepreneurs. And so I think being able to 100% execute in all three of those is very challenging at times. And so that's where my focus is how do I, use my brain to multitask all of those things at once and be really good at that. Hypercritical self-awareness, things like that. So, but I think the awareness piece is something I've really gotten good at. Now it's about the execution. I think, business is very fun and natural. I enjoy the stress of business, and that's where I like operating. So I tend to lean heavier in there. I think now my focus is how to duplicate that in personal life, to be equally as, quote unquote, successful in those natures in the same way.
So you're, visionary strategy. I'm visionary strategy. Early on in franchising, the successful people around me were all operational people. Like they would just get in there and execute. Made me think like I'm not a great entrepreneur. Like these guys are better entrepreneurs than me because they are amazing operators. And it wasn't until I started to have amazing operators on my team as hires did I realize strategy, visionary was like valued. Was there a time when you didn't value that part of you as much as you do today? Or have you always just had high level value in that strength of yours?
Well, it's funny because I would say mid career for me, about 2014 ish, I was, middle manager on the verge of promoted into more the executive level. But I had a CEO that was like, I can't promote you until you delegate. So I was actually in the opposite. I was like full bred operator. And the reason was because my brain works very well in quick wins. And at this time, I was running a large supply chain. It's like past due to revenue, right? Like all these things. And so it's like, how do you get that as low as possible? But I had a team of, I think, 10, 11 people, and it was this fixation on perfection. So I wasn't able to like delegate that. But then I started doing more strategy work and realized like this is where I actually want to be using the skill sets I've developed on more the operational side, but I enjoy more of the strategy. And so that really forced me, one, I was told I would not be promoted unless I did delegate, but that really forced me to being comfortable with floating in a lane that can be perceived as like, well, they're not like hands on all the time. Like what value are they adding? Right. It's that mindset you have to educate the team on. But I also think it's like not having an ego and dropping who you are, and really it's about explaining to the team and your employees, the vision and the reason for like what my role is and what I'm responsible for and how that interacts with your role. Became very comfortable and confident in that lane probably 5, 6 years ago. And it's all about, as you said, building really strong teams. And if you were to ask me, like, what's the biggest success we had in 25 as 6G, our wellness platform, it was just that. Our corporate team, we have 4 people. That's it. We'll have 4 people at 50 studios and 100, maybe a fifth with, a couple. But all different skill sets, and all of it kind of creates the puzzle. Our COO, Mallory, also my wife, is very much the people process execution, like phenomenal at building a studio playbook and store and high level. And I think that can be applied in multi brands. And Brent, as I said, corporate development, he's kind of the in between me and her. And then we have a chief of staff and brand person who really helps with standardization and also holds us accountable as a leadership team to doing what we said we were going to do. And I think to your point, what that does is it allows me to be absentee in the day to day, but in the things that add value to the company. Because my job right now is how do we perform in 2028? That is my job, right? And I'm spending most of the time there. And so the team is really starting to understand that value of, hey, Hunter was working on finance and other brands and how things go together. I do hold all the weight for, responsibility of the employees and making sure the finances work and things like that while they're executing. And so I think it's just really being open about that as a person and with your team and talking through and making sure everybody understands the why. That's the biggest piece is, do you all understand what each of our roles are and how that equals 1 + 1 is 11, not 2 or 3? And so that communication piece is super important.
Attention, franchisors and franchisees. There are two really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisee and you want to be around a community of successful Zs and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my Franchisee Mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com.
So you now have two different franchises. Walk through the thought process of like when you first got into it, like you bought X amount of territories, planned to open up X amount, when your plan was to get that second brand. Are you on track, off track, and where are you today? So you got two brands. One is Sweat House, second is Face Foundry. And so walk us through like the mental aspect of getting into it and then where you are today.
Yeah, I think, we were all in on the industry. We did a lot of research of like, first of all, we love the franchise concept because it's like I'm agnostic to whether it's my idea. Wanted a bit of a platform that was already in place, right? Like that is the framework of a franchise is they have a brand, an element, some level of a playbook, right? Which continues to evolve. So we were all in on that. So we landed on the wellness space because of I'll say the obvious, but lots of research. It's a huge market. It's growing. 20-year-olds are hanging out in cold plunges and saunas or, music festivals versus drinking booze all the time. So like the longevity period of that, no pun intended, was there. And so as a corporate M&A background, that's an important piece of like, where do we want to land? Plus it's a fun space that we've been around forever. So we launched this, got a bit of inspiration through some of the, I would say North Star, whether it's food or wellness, like multi-brand platform operators. We wanted to definitely go big. That's the world we came from, was big organizations. And so, in all honesty, we didn't lay out a timeline of like brand number 2 or frankly, even lay out a financial. I would say in my career, I've operated in a bit of a calculated by feel in some things, like, the framework, the strategy, but it does need to be on paper finance wise, but there's a bit of feel and things sometimes just fall in your lap. And so the key levers we loved about both brands is we have an element of exclusivity on territory, which was really important to me. I don't necessarily want to compete on marketing dollars or in similar market with somebody. So that was a big piece. We had strong upfront relationships with the founders or the team. So we felt like, hey, we could see ourselves, being good partners. We understood their vision. And part of that vision, as I said in the beginning, like I'm a builder. So I want to, it doesn't need to be perfect today, but is there upside? And so those were kind of the key levers. when we launched Face Foundry, we got introduced that through actually one of our real estate partners that helped us with a site for a sweat house, and she was a member. I love the concept because it was very similar in appeal. So it's a high end feel, open space, but under 60 minutes, which I think we all need as busy people. Um, but I love the diversification of capital, cost to open, those kind of things. So as far as the two brands, like client base, just a little bit different model. So, and we'll look at that as we expand further there. So mentally, it was, I think where the conflict arose was this goes back to skill set, strategy, mindset. I've always been part of businesses that scaled quickly. And as it relates to what's a successful scaled entrepreneur, I think you would probably agree you have to have a process and a playbook. Like it's repeatable, right? Um, and so I personally am under the belief you can't do that by opening one or two, even. You got to sort of force growth. And so that's what we did. Made our team uncomfortable a little bit, but it forced better process output quicker, which has allowed us now to scale even faster, I think. And so that's where most of the mental conflict was between the teams is like, oh, I don't know, should we open, 4 or 5 this year, two right on top of each other? I'm not sure I'd recommend that again. But that's where most of the mental conflict was amongst the team, but we're better off for it. And so I think that's a bit of yourself. You have to have a little bit of trust, and this is the right decision. So we've certainly made mistakes along the way, but we learn from those, and I think they'll make us better off.
Why beauty? Tell me a bit about Face Foundry, what you liked about the beauty category.
Yeah, I love it. I'm super bullish on the beauty category. I think the fundamentals of the business, it's a very approachable model. The reason I love Face Foundry in particular is it's to me very simple. We're really focused on facials, right? There's not a huge broad menu. We do provide some elements of optionality, but they're all in on this one dynamic, and that's something that a lot of consumers can benefit from. I loved that you're only asking the client to come in really once a month. I think that's huge. It leads to a really good model for somebody in an approachable price point. But I also think it's something you can immediately feel. And so all of those elements, as well as it being a high end aesthetic and a very welcoming environment. But I love the beauty space. I think there's other things that go along really well with it. If you think about like a wax or a tan, things like that. The reason I love those kind of businesses is I think anybody in wellness knows there's a bit of seasonality, at least perception. And so some of those balance themselves out, right? If you get a wax or a tan, that's, maybe that's like a March to October versus the others are like a November to March, right? So that's how we think about things and brands. And then ultimately it's aggregating that client approach of like, hey, now I have a client, we call it bigger share of wallet. So if that client's going to spend X dollars a month on something, how do I touch that, efficiently and uniquely with our brand and 6G and the franchises we support?
So let's talk about like opening up multiple before the concept's maybe fully proven out, or before you're super comfortable with like it's going to cash flow on this date, and using the profits from one business to open up the second and the third location. That's a tough thing. I did it with Sola Salons. I mean, we had 3 of these things open up before they were, before we were super comfortable with the model. The first one opened up normal. The second one lost money, a bunch of money for a long period of time. And the third one opened up and it was making money right away. But if we hadn't done all 3, we wouldn't have had that sample to, same entrepreneur, same general market, 3 different locations and 3 different outcomes. So it would have been easy if we would have opened up that second one and it was a dog to be like, this model doesn't work. That doesn't work. Why'd we get into this? And we would have never opened up another one if we had just gone and based our conclusion of the whole franchise based off of one of 12 locations that we eventually opened up. That was the worst one by far. Most of them opened up really strong. So going into this with both of these different brands, you can kind of lump it together as an entrepreneur or do it kind of separate as a franchisee in different brands. But like, how do you think about opening up multiple units? Because you signed up for quite a few. You're going to take the territory off the market so you can grow both brands. Just give us some insights into your mind, how you think about that, challenges, the bad days, the good days, all of that.
I think you simplify it by, nothing scientific here. If it takes twice as long and twice as much, would you still be happy with the business? The answer is yes. Then I think you just plan that out. We had a pretty good framework for growth, a lot of experience in pro formas, things like that. I've run big businesses. So I think leaning on that expertise did help. But for us, I was always told, we did a lot of research on multi-unit operators, and they said, hey, look, like, you're not going to have 100 aces. Like, you're going to have 70-80% of them will be great. And then the others may be what they are. And so I would say, it's still pretty intense for us some days, where I personally am a bit of a perfectionist type A. I want everything to look great. So there'll be days, we have 7 open. For me, it's all, how do all 7 perform that way? But we really had expectations for, hey, if this performs as worse as possible, here's what that looks like to us. Do we have enough capital to support that? Obviously, that was the basic planning we went through. I will tell you, the biggest fundamental reset that I had to personally make, and I'm still sort of going through this, but I think it was the best for us in the long term, is we elbow greased our first 2 sweat houses, right? So it was owners in the business every day, all of that. And that is a process you need to go through. And by the way, I still work shifts at the studio. One, I enjoy it, but I think it's important, because if I'm going to tell the team, here's your labor model, I need to be able to make sure that makes sense when I'm the one working in it. But we made a conscious decision to, we overhired up front to build a team and give them experience. So that's a regional, right? This is a career for somebody. It's not, your base level frontline. So we made a conscious decision to open stores and studios through the team. And so that was more of the process of, okay, this may not open cash positive, or it is, but it's not this. And are we okay with that, in order for the long term to say our teams can now do that, right? So for me, my dream scenario is, I'm in the business every day, but I'm working on the investment and brands and things like that. I'm not opening a studio. And I think that was our biggest kind of level set of performance was, can we allow and believe in our teams to open these studios at the front so that they can get the experience, knowing that may mean, hey, I'm not going to make a profit day one. And by the way, that's nothing against them. It's just, this is a new experience for them, but it also process. And so that was probably more the conscious, but it was a self-realization of, like, if we do this, then X may happen. And you have to be okay with that. So in the moment, people, at top level will say, well, hey, you opened those first 2 or 3 and they absolutely crushed it, but your next 2 are sort of 70% of that. Like, what's going on? Is it like a bad brand, or your process sucked? No, we just did that differently. Right. And so, but in 2 years, when I can come back to you, Eric, and say, hey, our regionals crushed these openings, they just opened 10 and actually did better than we did in the start. That's the bet. And so I think that's where most of our realization and planning has come from, is how do we do this through our teams, which, one, makes them better, and it also makes us better, because our ultimate goal is to be a growth platform for somebody, right? And you have to be able to do that through the teams and give them opportunities to run that. That's where your quote unquote absentee comes from, right?
So you can open up as a franchisee a brick and mortar and open up one. And the way that you open up one, and if your goal, like, it depends what your goal is. If your goal is semi-absentee on one, that's going to be a challenge with any business, because semi-absentee or executive is having a team. It's not like the business itself, the industry itself is necessarily semi-absentee. It's the team that you build around it that helps you be the owner with the team around you, versus you being the entrepreneur that's doing everything day to day. So you can open up one location. If you tailor it to be super profitable, you're probably working in that business a lot yourself, and running a lean team. Now, if you are multi-unit and the goal is to be semi-absentee or have a larger organization. So semi-absentee is the same thing as having a second or third brand, or being able to do other things. It's the same difference. You can either be on vacation all the time, or you can have another business that you're launching. So as a multi-unit owner and getting ready to launch that, you are building different than a single unit franchisee that's optimizing for profitability or cash flow. You're optimizing for something different. And that's what I hear you saying, like, you went into this as a multi-unit franchisee optimizing for something different. So dive into that just a little bit deeper, a little bit more. mindset, the risks that you took, what went well, what were some of the challenges as you had a model that was multi-unit, meaning you had a development schedule to stick to. And did you stick to that development schedule, or closely stick to it? And was there a point where you're like, I might bail on this, and it might not work, and I'm okay with that? Like, just, I know there's a lot there, but I have a lot in my mind because I see this kind of topic come up with a lot of different franchise brands and franchisees.
Yeah, no, I think great question. I'll try to answer it with an example. One, we have stuck to our development agreement. We've actually beat it a little bit, and that's intentional to give ourselves a little bit of a learning leeway there. Um, I would think the biggest place where this has become relevant is we opened our first locations in an area where none of our leadership team lived day to day, which was Kansas City, right? I'm only 2.5 hours away, but that's a big difference in a studio, right? And so, um, what that means is I'm not out at an event, or Mallory's not at an event, or our chief of staff isn't out at an event. It's through our team. And, do they know the scripting the same and all of that? How do you test that out? Or more relevant, now that you're open, one thing we've learned is like how to hire and manage turnover in the beginning. Sometimes jobs aren't what the frontline sales team thinks it is, and you have some turnover. And when you're not there as an owner to support your manager physically, that can present a bit of a challenge. And that makes you think like, hey, is this multi-state thing, like, is this really where we want for ourselves and our people, right? Because we're fixers also. And so if I can't be there side by side to that manager, how does that make me feel? How does that make them feel? We're very much like in the battle with you type leaders, right? We ask our teams to buy into us versus people in the business. And so I think the biggest point of not necessarily doubt, but perspective, I would call it, is when we've launched in Kansas City. Both are doing very well, by the way, but it's a different process when you don't live there. And it's really like, how do I fundamentally support that management team? But this is big for us because we do want to be, Chicago to Dallas and both brands someday, or whatever that is. And you have to learn to go through that. What we've done now, though, is we've created better processes for people management and expectation setting. And ultimately, if you can communicate proactively to what will be new managers in those territories with you of, hey, here's what to expect. We may go through these challenges when you're opening, and I'll be here with you here and there, and not here with you there. So I think it's about that communication to them of what experiences they may go through and how that feels with and without you. But that's probably been our biggest point of, hey, perspective shift. Like, does this make sense to open in territories we don't live? For me, it's always yes. For the team, it's a little struggle. But I think that what that does is it causes you to build better structure around that. You obviously have regionals and things like that. Where you have to balance profitability with structure is, we're not at a place like in Kansas City, as an example. I can't just add a whole like regional perspective, right? Today. Now, once the studios get to a certain level, which we know, then that's when you launch. And so I think it's about being visible with the plans with the teams. Hey, you'll have in-region support at X versus now. Hopefully that's helpful.
Very helpful. All right. So I heard you say, like, as you were kind of describing that, this is what we have done differently. This is what we've changed. This is what we've, like, it was we. I didn't hear you say this is what the franchisor improved on, or this is how they've improved. Two different lines of question here. I do want to understand what the franchisor, how they've improved since you've been into it, because emerging brands, franchisors are always improving, at a pretty quick rate as they go from 5 franchisees to 10 to 20 to 40 to 100, whatever it is. But I heard you say we, and what have you done in the business as your group, your business, that has moved the needle, or you've seen a lot of success with, that didn't come from the franchisor?
I
What I'm
think it's
getting is,
really,
like, a lot of franchisees, sorry to interrupt, Hunter, a lot of franchisees want the franchisor to do everything for them.
oh, yeah.
And the franchisors aren't going to do everything for the franchisee. So I love the podcast because I get to talk to franchisors to hear their expectation. I get to talk to franchisees to hear their expectations. So I'd just love to kind of hear your take on that.
Yeah, and I think part of that is your discovery days and questioning is like, hey, where do you feel your brand is really strong in your operation? Like, what is the strength in your brand? And, and then here's our background. Where do you feel, first of all, are you open to feedback? Both of them are, by the way. That's obviously important as any team. But two, like, where can we add value? And I think that's important to us as a team. It's like we want to add value constantly. And we have done that. And both brands have been very supportive of that evolution. I think it's no egos. Everybody's rolling their sleeves up. Like we all want the best for this brand for everybody, and ultimately, if you're a franchisor, right, you want quality franchisees, whether that's big or small. And those kind of people are going to be in systems where there's a model of and a culture of just continuous improvement, right, and evolution. And so, little things like scripting and pre-sales, what works, what doesn't. And if one group is killing it, like let's understand why they're doing it. Is it the literal script, right? Like if you're using automations, like, and it doesn't have a name of somebody and everybody thinks it's a robot, you're probably going to get less responses, right? So it's the little things. And so both brands have been very open to that. We also have great groups of other franchisees. Like everybody has a strength. Some are really good at construction and some are good at marketing and some are good at sales ops and, technical things with, plunges or hydrofacial machines. And so I think it's just everybody really communicating effectively and like, what is that manager, that method? So in one of our brands like Sweat House, we have a weekly meeting with all the Z's, have a regular one-on-one touch point with the CEO, and it's just a constant feedback loop. I think the biggest thing I would advise somebody that we didn't necessarily think through when we started, but we definitely are conscious now is, when you look at like a franchise business consultant who's your partner on a day-to-day level, like what is their role really, right? If you're a multi-brand operator that wants to have 20 studios, it's very likely that FBC is not open 20 studios themselves. So like, what is your expectation of them to help you? To your point, like the franchisor can't and won't do everything for you. So you have to understand that going forward. And again, it's like, where's your strength, where's theirs, and what's the communication loop? And so I think that's the biggest thing I see as I observe other Z's is like, they do sometimes expect people to do a little bit more for them than the reality. And I think the good groups understand that and they execute very well. And they provide, last thing I'll say is provide feedback based on data. It's not like emotion or, one instance. It's like, what does the data consistently tell you? And you have credibility in your voice. And so that way you're really impacting with, performance.
So what I kind of heard, like not all franchisees are happy like you're happy. And that probably means it's a normal franchise. Like, I don't know any franchise system today that all of the franchisees are happy. Even in some systems where I know franchisees are making a ton of money. They're making, $300,000, $400,000, $500,000 per location. And these, just to be clear, these are not Front Street brands. These are brands that have been around for quite a while, but I know a lot of their franchisees, and the franchisees are very successful. Yet I know some very unhappy franchisees in these different brands. So it's not always if you're validating, you need to understand who you're talking to at the franchise level. How do you in your system like talk to other franchise, deal with other franchisees? Do you listen to the ones that are not as happy? And if you do, like, what do you listen to them about versus other top performers?
Yeah, no, great. And we get a lot of both sides. And I think it's about framing the perspective. I mean, ultimately, you always need to be honest. I think we all go through the same struggles. And as long as those are the same core things, then great. All actually have the same issue and let's be partners and work through that. Our group takes the approach of, we have a bit more credibility through performance. We are performing pretty well, and then obviously a larger group. So, but we try to be in the frame of mind of whether you're a 3 licensed person or 20 or 100. It's how do I add value? It's also not speaking out of turn. Like, you need to let people vent a little bit. But I think we do try to be what I would say a prohibitor, looking at an NPS score, like how do we reframe the mind and how do we address the issues? And so when we speak on something that we see as a problem, we don't just cry wolf all the time. So people, I think, take it a little more seriously. But you need to bring solutions. You can't describe. And so that's what we try to do. Because I do think the culture of the franchisees is very important to the success of the actual franchisor, obviously. And so, and both groups have been really good about advisory councils and things like that. So that obviously helps. But it's like any team, form, storm, norm. So at the end of the day, we try to be, a positive adder to that, and not go below the line or weeds or whatever. So that's our frame.
All right. Last question. Why did you start an HVAC company? Some people will be like, that's like out of left field. And why did you not do it with a franchise versus doing it on your own?
Great question. First of all, I started HVAC. It goes back to the real estate days, and even in Sweat House, I saw a portion of my build out, which obviously HVAC is important to any commercial business. Integrated through that, I happen to be a huge believer in the home services market, so I wouldn't be shocked if someday we aren't in the franchise space. I think it was sort of a perfect situation where I happen to also have a family member, a nephew that I believe in with his trade, and giving him the opportunity to learn like what running a business looks like versus being a manager at a company. And so got visibility through real estate, got visibility through Sweat House, and then, believed in the market space and had a family member that I could trust on the day-to-day basis that has a skill set that I don't have. It's funny, this weekend I saw, there's lots of posts on LinkedIn, but I saw somebody post about you shouldn't get in a business unless you understand the market. And I couldn't fundamentally disagree more. I rarely comment on those kind of things because I think everybody has a perspective that can be right in their own view. But I did comment, and I said, you don't have to be an expert in an industry, but you do need to understand the fundamentals, and you can hire the expertise and still be successful as an entrepreneur. And so this is one of those cases. I couldn't tell you a word about how to fix an HVAC, but I understand it. And my nephew, certainly understands it from a technical nature. So very excited about that business. There's a lot of great home services franchises out there. So I'm excited to see where that goes over the next few years.
Well, I love seeing entrepreneurs like you, come from a completely different background, get into franchising, multi-unit, multi-brand franchisee, and then, obviously an investor. And there's reasons why, I love investing and multifamily. I've invested in different multifamily as well, more through syndications and whatnot. And then doing your own thing as an entrepreneur. So who knows where that will lead. So Hunter, this has been a lot of fun, very informative. So thanks for coming on, man.
No, I appreciate the opportunity, and thanks for all you guys do. I think it's really beneficial for you sharing these different topics and people understanding what others are doing. It's a really great community to be a piece of. So fortunate and grateful to be on here today. Thanks for everything.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.